Hi all, this is Steve May, the market chartist on behalf of forextraders.com, and we're now going to take a look at both the dollar versus the Japanese yen and the euro versus the dollar in here. With the dollar certainly reinforces its position as a strong currency, not only within the G10, the broader G10, G8 currency complex, but also within the narrower G3 currency complex, that's euro versus dollar and yen. Okay, so dollar yen in here had this surging rally. We're already rallying strongly in here from early November. In fact, from late September through early October, we created a double bottom structure in here. But then we had this strong rally from early November, and despite the sell-off through the presidential election result in here, the market rebounding strongly, extending higher post the election in here, taking out an important resistance point here at 107.49. That creates now a quadruple bottom structure in here, built since June of this year, since the sell-off we saw on the Brexit vote. That quadruple bottom leaves the risk for still further upside price action, and the market already now over the last 24 hours pushing above here the 38.2% retracement at 109.26 of the entire 2015 through 2016 sell-off. That leaves bigger picture upside pressures for targets here at 111.45, 111.89, and potentially into the end of the year even higher, maybe towards 113.80, 114.88. So certainly a bigger picture upside threat to dollar yen, and also a threat higher into the end of this week, into Thursday, Friday, maybe even closer to that 111.45 level. A similar story for dollar strength versus the euro. Again, already selling off in here, rolling lower in here through October, and despite the rebound in early November and then that spike higher on the presidential election result up to 113, the subsequent sell-off in here and the sell-off actually before the election result, leaving negative pressures intact. We're taking out some really important supports: 108.48, 108.23.21, 107.77, and just more recently in here over the last 24 hours, 107.08. That simply leaves risk down to this cycle low in here from the very end of 2015 down at 105.20, and potentially even into year end closer to parity. Certainly the risk into Q1 of next year down to parity, but maybe even year end down to parity, and certainly see risk for a lower price action towards this 105.20 level going into the end of this week. This has been Steve May, the market chartist on behalf of forextraders.com, and I wish you a great trading week.